I don't think the next 5 years in the US are going to look like anything of years past. The market is, could potentially have a seismic enough pullback that it is going to, and I wrote this, break the brains of the very fragile market participants that we have created today through monetary policy. I do think it's possible. These black swans come out of nowhere. And we, again, have leverage on top of nonsense, on top of valuations, on top of relentless market cheerleading.
But do you see a sudden crash happening when you say 40 to 50% pullback?
Gold standard to me makes a lot of sense. These little pepperings of Trump, like he who holds the gold makes the rules, like those things. He's not saying that for no reason. He's got somebody in his ear talking to him about this. When will I think about selling gold? I'll think about selling gold when the people on CNBC can't stop talking about it. And that hasn't even happened because they haven't even mentioned it.
The reverse Kramer index, right? When Kramer tells you to buy gold.
The idea of if we return to some type of gold standard, that the miners would eventually be nationalized. So there's 73 other companies that the government might want to keep close if this is what their playbook is going to be. One thing I think is for sure is nobody's ready for it.
This is The Real Story with Michelle Makori.
Hello, I'm Michelle Makori. Thank you so much for joining us. Wall Street is celebrating new record highs, but the warning lights are flashing red. A number of key indicators are saying that this market looks even more stretched than the dot-com bubble. And my next guest warns that the US market isn't just expensive, it's pornographically overvalued. And when gravity hits, he says, the fall will be fast and brutal. Today on The Real Story, we are joined by a voice that's built a following by saying what most on Wall Street will not. Chris Irons, better known as Quoth the Raven, has carved out a space as one of the most brutally honest, insightful, sarcastic, and colorful commentators in finance. Through his podcast, his writing, and his analysis, he's built a reputation for cutting through the noise, the hype, and what he says are the outright lies that too often define the markets. And as markets just hit new all-time highs, Chris is warning that the next market crash could be so seismic, it risks collapsing society, inflicting unprecedented psychological damage, and making COVID look like a walk in the park. Chris, those are direct quotes from you. I'm glad you're getting some amusement out of your own work there, but that's me quoting you, and I'm very excited to have you with us.
Yeah, well, it's just funny, like when you're writing these things, the reasoning and the logic in your head when you write them is sound. I mean, I don't ever sit down at the computer and say, like, how sensational can I be today? Because I don't really take well to that. First off, I don't like the pejoratives that mainstream financial media uses to describe people that have an Austrian viewpoint or people that, still believe in basic economics, basically. So I don't take well to that. I don't like how those people are cast off as, naysayers or doomsday sayers, because to me, those people just generally make sense. And when I hear somebody like Peter Schiff or, any number of guests that you've had on your show who I agree with and who I've learned from, when I hear them talk, to me, it just sounds like sound, solid, logical reasoning based on the basic, tenets of economics and the very basic math at the heart of like Econ 101. So I don't much take well to that. And I don't take well to the idea that just because I'm a skeptic of markets and many individual companies and many sectors, and we'll talk about everything, that there aren't things that I'm bullish on, because I am bullish in certain pockets of the market. But if you want to make an argument that the market is, could potentially have a seismic enough pullback that it is going to, and I wrote this, break the brains of the very fragile market participants that we have created today through monetary policy, I do think it's possible. And, I was laughing kind of like when you laugh when you hear bad news, because you're just kind of like, fuck, I hope it doesn't happen. But like, there's a greater than zero chance that it does, in my opinion.
Right, gallows humor. Certainly, my Freudian coping mechanism of choice is having a sense of humor as times get bleak. But yes, those are your words, Chris, and we will break down what it means to have a psychological breakdown if we do see this market pullback that you are anticipating. And of course, as you mentioned, you are bullish on certain sectors. You've been very correct in some of your calls. We'll break those down. But just as a starting point, let's take a 50,000-foot view here. We just saw markets rally to new all-time highs on expectations of that September Fed cut after we heard from Jerome Powell. He signaled that the Fed may be preparing to cut rates. Markets cheered. Investors are now pricing in a 90% chance of a September rate cut, according to the CME Fed Watch tool. And so we had the NASDAQ and the S&P rally aggressively. But big picture, you see that ultimately we are heading for a crash. So again, break down your core macro thesis. What are you seeing that others are not?
Well, let's just talk about Friday first. I mean, the market responded as though a rate cut was a certainty and already happened. And, it hasn't. It's not to say that Powell's rhetoric wasn't, down the dovish path. So it was basically what doves were expecting. And so he didn't come out and say, we're going to stand our ground or, any of those things. So that's where the market euphoria came from. But zooming out from there, you don't really have a guarantee of rate cuts because if the data, in September continues to look like this last PPI data, I don't know how that they're going to, maybe they'll do it. They'll just cave to wanting to cut rates.
You know what? This may actually be a good time, not to cut you off, Chris, but we do have a soundbite from Powell. So maybe let's play that soundbite and then we can have you sort of dissect the Fed speak on the other side.
In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
All right, so there you have it. Jerome Powell, what do you make of that?
Well, he's working the gas and the brake at the same time, right? I mean, look, the notion that they're going to float the idea of cutting rates with CPI at 2.8% and this last PPI report, which, I think most people would argue are price hikes that are coming down the pipe through CPI, but they're definitely hitting the producers, right? Which was a huge miss. I mean, that came in way hot. I think it came in at like 0.9% versus like 0.25% expectations or something. I mean, it was a huge miss, PPI. The notion that they're entertaining interest rate cuts in an environment like that where, shows that they're not really concerned about price stability at all. Because, look, the 2% target, their arbitrary 2% target that they've come up with, which is essentially, as much inflation as they think they can get away with, they're not near it. They're in percentage terms 45% higher than it should be, right? So the notion that he's going to come out and say, okay, like we're focused on both price stability and jobs, and the jobs risk is to the downside, and the price stability risk is to the upside. Look, the idea that like this is the time to enter some type of easing cycle, or that he knows what the neutral rate is, like. Look, everybody, I think most people on your show would agree that the market should be setting the neutral rate, right? Like markets should be setting interest rates. Certainly that's what I think. That's what a lot of Austrian people think. Any other time this guy's been interviewed, and I've watched countless like roundtables and like fireside chats and all these bullshit like talks that he does throughout the course of the year, where he's asked directly what the neutral rate of interest is, he has no idea. He comes up with some bullshit response and, basically just bats it around a little bit and says, well, like we could sit down and we could start drawing, lines and charts and graphs, and we could poll the 12 Fed governors, but, really I'm not prepared to say what the neutral rate is today. Now all of a sudden it's like, oh, okay, we're 100 basis points over the neutral rate. They're just flying blind. And if they had any notion of objectivity, they would be talking about maybe raising rates, I think. Because that's, our look, we talked about this the other day. There's two paths for the Fed. Like, they can create a deflationary depression, I think, in assets by leaving real rates positive, or they can, start an easing cycle like he's talking about now at a point where inflation is high, which is going to, ostensibly probably create more inflation. And so, unless we forget that most markets over the course of history, markets really haven't crashed until the Fed has begun its first rate cuts. So traditionally, I put this out on my Substack in my, there's like a chat area in my Substack. I just dropped this chart in there for my subscribers. But if you look at like the last like 4 major recessions, or like even like Lehman's bankruptcy, like that, Lehman filed for bankruptcy after the Fed started cutting rates already. So in general, the Fed is stuck between a rock and a hard. Go ahead. Sorry.
No. You said go ahead. Stuck between a rock and a hard place.
It's just stuck between a rock and a hard place. Like he doesn't have an enviable job at this point. He's got a president that wants him to take rates to zero. Go ahead.
Well, there you go. I mean, you said it was too late with Lehman, and that's why you've got President Trump calling him too late Powell, and he may be succumbing to Trump pressure. You said they should raise rates, maybe keep them where they're at, but when you talk about the president's perspective, obviously he wants lower rates to make servicing that $37 trillion in debt a little more doable, a little cheaper. I don't know how much of significance 1 or 2 rate cuts gets you, but that's certainly fiscal dominance is a big part here, and that's not the Fed mandate. But you do look at the labor market, that's weakening. Job growth has slowed. We had recent reports showing a cooling in hiring. We've got those high borrowing costs already weighing on housing, manufacturing, small businesses, corporations, households. They're facing the same issue of servicing debt, right? The lowering rates does alleviate
delinquencies.
So it does alleviate pressure on balance sheets, prevents defaults, and that potentially could cascade into a financial crisis. But ultimately, you don't think that this really makes a big difference in the grand scheme of things, but you do think that Fed should stay the course.
I think that they have succumbed to the idea that, inflation is going to be the path. And I think most of the people that I read avidly and listen to, it's a consensus because look, inflation is this like dark tax that kind of works in the machinery of night, that most common folk more understand it now than they ever have, thanks to Bitcoin kind of making monetary policy a mainstream narrative and inflation becoming a political football in the last election. But it is still kind of the easiest way to present as though everything's fine when it isn't. You're just paying for it in ways that don't look as awful as a deflationary depression does. So I think that that's the course that they're going to take. I think, you're probably right in assuming that he wants rates lower to help service the debt as part of that. But, look, we're really in unprecedented territory. When you look back at what happened during Liberation Day, after the tariffs were announced and you had the bond market crashing at the same time as the equity market, like that's usually what you see in emerging market countries. You don't see that in, the US with the global reserve currency. So just zooming out even further and looking at the global picture with the BRICS nations, and Andy talks about all these, the Shanghai Gold Exchange coming online, and they're central banks hoarding more gold. There does seem to be a bigger kind of sea change here at play that will eventually lead to some type of new standard. I happen to think it'll be paired to the price of gold somehow. I think that's what this administration, at least that's what the tea leaves are kind of suggesting, that they're cooking up something with, trying to back the currency with gold or back treasuries with gold. I'm not really sure, but these little pepperings of Trump, like he who holds the gold makes the rules, like those things. He's not saying that for no reason. He's got somebody in his ear talking to him about this. So, we're really in unprecedented territory, and we're going to get unprecedented results. And I wish I could tell you the exact time and date and whether the market is going to crash up or crash down, but I can't because I'm just bearing witness to this insane experiment in monetary policy the same way the rest of the world is. And the sad thing is now, just one more thing, the sad thing is that market participants now have been so conditioned to just expect comfort and that everything's going to be fine. I mean, you have a whole generation of investors now that haven't really lived through a bear market of any type of, prolonged length, where the Fed hasn't been there to bail them out. And so when you talk about something like what's happened in Japan, where the market has traded sideways for multiple decades, I think that in lieu of like even crashing 70%, like maybe we just, maybe we crash to, 20% and we just stay there for 10, 15 years. Like that's also a distinct possibility. And I don't think anybody psychologically, including the new horde of investors now in the market that are basically just professional gamblers, they don't know anything about equity valuations. They just know how to buy options on Robinhood. If you go to Wall Street Bets, that's all you see. Those people are not prepared for a market to trade sideways. They're not prepared for a market to, return anything less than 7% per annum. And, the harder the market crashes, obviously the more pain there's going to be, but there can also be longer, prolonged periods of pain where the market may just trade sideways. But one thing I think is for sure is nobody's ready for it. Like no one, it's inconceivable to people that it'll happen. And right now, as we're at peak valuations across the board, just throw a dart, historical PE, Buffett indicator, whatever you want to look at. We're near the top, basically. And I saw a metric yesterday where you combine these valuations, we're at all-time highs. And everybody's just super complacent. And these are usually the times when you want to have your head on a swivel instead of being complacent.
Okay, yeah. Complacency kills, that's for sure. That was like someone's message 9 on my Bloomberg terminal when I worked at Bloomberg back in the day. For those that don't know what a message 9 is, it's like sort of their tagline, and was complacency kills. I still remember that line. You've made some very big points here. Certainly one about a global monetary reset, which I want to circle back to. But I do want to touch on these pornographic valuations, as you call them, and why you're warning about a crash. So give us some of the metrics that you're seeing, why you think the markets are so overvalued right now.
Well, like I wrote in that article, and I feel like I've been writing the same article for a year or 2 years, at least. But no matter how you want to look at the market, whether it's market cap to GDP, whether it's historical price to earnings averages, whether it's price to sales averages, whether it's price to book averages, like whether it's the Schiller PE, which is like one of my, another way to gauge looking at the market, we're near or at all-time highs, or 1.5 to 2 standard deviations from the average over the course of the last 40 years. And so take with that whatever you take from it, whatever you'd like. I mean, to me, certainly as a student of the markets for at least 10 or 15 years now, and being an Austrian school guy, I happen to think that, we can't stay at a fever pitch forever, and that markets do eventually correct. And historical averages are historical averages for a reason, because, we can stay above them for a really long period of time, but then we'll go below them. And then, so I just happen to think that markets have a way of always correcting and returning balance, and just kind of drifting down towards where historically they've been. Even if you want to suggest that like this time it's different, which is like the bullshit excuse du jour that all these douchebags on financial media have to say all day, not because they're valuing the market and coming up with a price target, because they're trying to backfit their price target to what the market is doing, which is it's the opposite of analysis. It's letting the market tell you what you think, which is completely asinine. But, all of these people have to come up with some type of bullshit narrative to explain why they have the balls to get on CNBC and recommend stocks at 35 times earnings, and then come back on when they're at 40 times earnings and recommend them again. And one of the one of the points that I read is like, well, the markets are different now. Like things are different in the age of AI, and we're in modern monetary policy is different, and productivity is different, and so like, yeah, this time it's different. Okay, like that's a running joke in the world of markets. This time it's different for a reason, because everybody says that all the time, and it always turns out not to be different. So the band-aids and the bullshit excuses that the analysts use and that the Fed uses, and that they might change the names for the bank term funding program and all these cute little things that they keep doing to kind of rescue markets every time they hiccup. Yeah, like there's a million and one different ways to sweep bullshit under the rug, but that doesn't mean that we're fixing the problem at its source. And so if you look, even if you think things are different and we're going to revert to a 20 multiple, we've had some recessions and some crashes where we reverted to an 8 multiple or a 10 multiple or a 12 multiple on the S&P. Even if you think, we're going to revert to a 20 multiple or a 20 or like an 18 multiple, you're talking about 40% or 50% downside from here. And if that happens in any prolonged period of time, market participants who are under the false impression that they deserve to be fucking comfortable all the time are not going to do well with it. And personally, I think that like in the case of Liberation Day, I think we had maybe 1 or 2 more days before something really broke. I don't think the timing of Bissett and Trump coming out and saying, hey, we're going to offer up a 60-day pause here was coincidental. Because if you remember those days, the bond market was crashing at the same time the equity market was crashing. You had bond yields were going through the roof. And so, what Scott Bissett must have been thinking at the time, I don't know. But, they essentially, in my opinion, caved. And I had just a feeling, and I'm not basing this on any data, but I had a feeling that we were really close to some very serious oh shit moments / margin calls. And I think that when equities get to a certain point where you get a collateral call, or some CRE developer is forced to mark their book, or some private equity company has to try to find liquidity and sadly try to find a bid on some crap that they've been holding for years and marking at a ridiculous valuation, when there's maybe a couple weeks to month window there that they have to kind of wriggle their way out of that. And I think that the ensuing spike from Trump backing off the tariff plans there, I think probably gave oxygen to a lot of excess and detritus in the market that really was probably on very borrowed time by the end of that first week. And so I think all of that excess will eventually have to come out one way or the other. We can't keep faking it forever. Maybe we can fake it for another 5 years if we go to 0% rates, and but the consequences will show up elsewhere. And I've said this before, like when it comes to black swans and it comes to catalysts to create a sell-off in the markets, like you were saying before, like complacency is a killer, because what happens is there's companies right now, Michelle, that have problems, big problems that we don't know about. Right now, it's Sunday, right? That we're talking, somebody in some fucking accounting department somewhere is at a company right now trying to fix some kind of snafu and get something past an auditor somewhere so that in the next earnings report, it looks like everything's fine when it's not. I don't know if it's a private equity mark. I don't know if it's a CRE mark. I don't know if it's a revenue recognition fraud. I don't know if it's a cash not being in the bank fraud, but somewhere that's happening. That stuff is already in the system. When the tide starts to come out a little bit, all of those things will be laid bare for what they are. And the perfect example of this and how quickly it can happen was Silicon Valley Bank, right? It was a Friday. I remember the trading week was over. I had already hopped on the train to Manioc to go get a beer. So I was like done for the week. And I remember walking from the train station to Manioc Pub and looking at my phone and seeing, Silicon Valley Bank is all of a sudden doing an emergency equity raise. And that shocked the shit out of the markets. Nobody was expecting it, right? What happened was Silicon Valley Bank was in a very serious liquidity crisis, and nobody knew about it until they did this fire sale to try to raise $1 billion or $2 billion. And what happened? everybody noticed. By Monday, okay, 48 hours over the weekend, they had something like $60 billion in redemptions. So they went from doing a fire sale of equity to try to steady the company to insolvent in 48 hours. COVID's another example. One day we went to bed and everything was fine. Yeah, there was, some cases in China and a couple here in the US, but nobody really knew what was going to happen. The next day we woke up, the Dow was down 20% and people were fist fighting over toilet paper in Costco. That's how quickly things can change. And complacency is the worst place you can be heading into a situation like that, because if you at least have a little sense of somehow how to hedge or how to be a little bit conservative with regard to how you're positioning yourself, you don't get caught like completely with your pants down in a situation like that. Because by the time we're done with this conversation, it's Sunday at 4:30 Eastern right now. By the time we wake up Monday morning, it could be a completely different market and we wouldn't even know it. So those are the things that I think 21-year-olds gambling on options and Robinhood don't understand.
Okay. Let's dissect some of what you said there. Firstly, you said a 40 to 50% pullback. Over what kind of time frame? I mean, do you see this as a sudden crash? Because it's very different if it's, slowly evolving, but do you see a sudden crash happening when you say 40 to 50% pullback?
Well, I think that, look, I don't want to speculate as to whether it happens, 1% at a time but there is going to be a certain level in markets where people who have been lying about their books or are margined to the tits, you got people, margin debt right now is at an all-time high, right? So you have these people that take on irresponsible amounts of leverage in a place like crypto, which is $4 trillion. And let's just say you believe in Bitcoin. So let's leave 2 trillion aside. Let's say there's $2 trillion worth of detritus and garbage and bilge and fart coin and Shiba Inu coin and, shit coin and all this other stuff out there. Let's say there's $2 trillion worth of that. With the leverage people get in the crypto market, where you basically have crap with a floor of zero. There's no balance sheet to fall back on. There's no book value to fall back on. Like something like Fartcoin is worth zero. And so with a $50 billion market cap, that's $50 billion that can just go poof into thin air. You take the leverage that you can get in crypto on top of that, which is, whatever, 50x, 100x, all these exotic things people can do in the crypto world where, regulation isn't the same as it is in the securities world. You pile that on top of the fact that you have a stock market that's trading at valuations that are at an all-time high. That is happening on top of what I think are two main things driving the market. One is the passive bid, which is a relentless, incessant buying program that comes as a result of people's 401ks and purchases of ETFs and those things, essentially a tail wagging the market dog instead of the other way around. This is why market breadth has been so terrible. 60% of the NASDAQ can be decliners and 40% can be advancers, and the market could still be up for the day because you have heavily weighted names, your Amazon, your Microsoft, your Meta, your NVIDIA, that just get this passive bid money regardless of valuation. And then on the other end, you have options gamma, which is, now people don't trade equities, right? People just trade options. And what happens when you trade options? You're taking on leverage. You're trading in 100 lots instead of trading in, 1 lots. And so what that does is it forces dealers and market makers who write these options to hedge against some of these positions that they're offering, which will cause them, I think, for the most part, since COVID at least, to buy equities and put somewhat of a bid under equities when calls are outweighing puts. And so you have these two kind of completely unnatural forces that are wagging the market dog instead of the dog wagging the tail. It used to be an ETF would go up because its components would go up. Apple would report great earnings, and so the NASDAQ ETF would rise as a result. And that still does happen. But primarily what's happening now is you have people dealing in the ETF, and what that does is allocates money to the individual equities. So you have ostensibly a $2 trillion crypto air pocket with leverage layered on top of all-time high valuations, which are being driven, in my opinion, by like major market mechanics that have nothing to do with common sense, fundamentals, valuation, investors having any clue what's going on. And then under that, you have a financial media that is on television all day, every day, backfitting bullshit theses to what's going on in the market because they don't want to look dumb and say, I have no fucking idea what's going on here. This is insane that people are buying stocks. You know, like it's obvious earnings are going to come down because of tariffs and because, you know, we have positive real rates. Nobody's saying that, you know, except maybe Gunlock. He gets on there once in a while and he's saying, I don't know what's going on. But yeah, so really it's just like one horrific decision on top of another. So would it surprise me if we woke up one morning and we were limit down and nobody knew why? You know, no, it wouldn't surprise me. In fact, we're probably due for multiple limit down days in a row in my, you know, crazy like Thomas Sowell basic economics brain. But I don't know if that's going to happen. And, you know, it may happen. I think probably the likely scenarios will have a sharp deleveraging at some point, and then the Fed will come in with the bazooka, and then it's going to be, all right, well, what's the consequences of that going to be? What's going to happen to the dollar? You know, so it's really, we're damned if we do, damned if we don't. We're so far off the free market, you know, just basics of math, basics of like monetary policy path that we just don't know which way is up. And so trying to predict just think about this. Think about how tethered to like names like NVIDIA or Tesla or Meta the market is. They are, again, as I was saying before, they are some of the sole driving forces behind what the market is doing. So you'll see a day where more S&P components are red than green. But Meta will be green, or Amazon will be green, or Apple will be green, and that will be what's driving the whole market higher. And if you look at these companies individually, you see Apple's a name that's growing like what? It's growing revenue like 5% or something like that. I mean, they're buying back a ton of stock, which is great. They generate a lot of cash, and they're using that to buy back stock. You look at NVIDIA. Okay, they're trading at what, 40, 45 times earnings. Okay, they have a bunch of weird circuitous relationships with CoreWeave and with Supermicro, and you know, they have these weird like customer concentration issues with those two names with like Microsoft. Like, yes, there's a lot of questions there that you're paying an absurdly high valuation for. You look at Tesla. Tesla's trading at 200 times earnings. Their legacy business has basically collapsed, and the company has become a call option on robotics and AI. Well, if that call option doesn't pan out, what happens then? So when you look at even the names that are driving the market higher, I don't see like a ridiculously crazy undervalued bull case for any of these names. In fact, I could give you probably off the top of my head more reasons not to own something like Tesla or NVIDIA than I could to own it now. Even Meta, again, one more. What did they come out with last week? They're freezing hiring in AI. They're cutting CapEx spending, or there was some other headline where they're disbanding part of their AI division. So it's like, all right, like those are the last 7 soldiers left driving the market, and the ice is starting to crack under them. So what do you think about that?
A lot to unpack there. Look, to your point on valuations, some of the factors that you did cite in your article, the Buffett indicator, showing that market cap relative to GDP, which is sitting near levels last seen in the dot-com and 2021 bubbles. Shiller's CAPE ratio, that measures how expensive stocks are by comparing today's prices to the past 10 years of average inflation-adjusted earnings. That's in the high 30s, so extreme territory historically. So, I get that the overvaluations are there. But, a crash you're saying could happen now, could happen in 5 years' time. And it's all about timing, right? Being early is being wrong. And when you look at how the can has been kicked down the road continuously, I mean, yes, to your point, the Fed does come to the rescue with QE or BTFP or whatever they want to call it this time, but it's the same playbook. So why would this time be different? Like, I get the Fed manipulation distorts the system, it devalues the dollar, the purchasing power, I get all of that, but in its own way, markets have then become a hedge against inflation themselves, all the more reason to stay in the markets, right? So I guess big picture is like, why, how are you positioning yourself if you're seeing a crash? I know you've got some winners that you're picking, but if you're seeing a crash, doesn't it, and then the Fed comes in and then they print more money, and then you're probably better off in equities because you want to save, yourself from the dollar declining as well as some other assets like, gold and Bitcoin. But how are you positioning yourself if you are seeing this crash?
Well, coming into the year, so on my Substack, I over the last few years have written at the beginning of the year about the names that I'm watching for the year, which is essentially my list of what I'm going to find intriguing for the year to come. And it's like a little like mock portfolio, and I keep track of it. Actually, a lot of the things I own personally, if not most of them. So coming into this year, the idea wasn't to be short the market. The idea was to find pockets of the market where there's still like unique kind of asymmetric valuable opportunities and ways to hedge against the type of, outright terror that we're talking about. And, look, at the end of the day, if the market crashes and there's a deleveraging, which it will happen, it's just a question of when. When that does happen, everything's going to get killed, right? So, and it doesn't really matter what, it's like during COVID, gold got killed, even after the Fed came out and announced their quantitative easing plans, because people were just trying to sell anything that wasn't bolted down. So coming into the year, I was focused on just trying to identify pockets of the market that have been overlooked, or that could be used as hedges against the type of situation that we're talking about. And so really, and my names for this year, last year I did not outperform the S&P. I think they were up 10 or 15% last year, but the S&P beat that. This year they're outperforming the S&P by more than 30%, at least for the time being. Although there's plenty of time for me to fuck it up here in the next couple months. But let's just say, if you want to keep score, take your photographs now of the portfolio. But no. The idea coming into this year was, gold miners, it was silver miners, it was sound money assets, it was emerging markets. These are all things that I still own. Gold miners, like probably my biggest equity position now. You look at them, they're up 80% this year, gold miners. Like they're beating Bitcoin, they're beating everything this year, gold miners. You look at a name like Newmont, we talked about, when we were doing our pre-interview, is up like 88% or something this year, ridiculous. And you could really go back to a lot of these names and look at like a price of cash flow and make a pretty strong argument that they're still relatively cheap. So I was long those names coming into this year. I was long a lot of uranium, nuclear names. So just I had like the nuclear, the URA, the NLR. I had CEG, which is an energy company. I had what else this year? A bunch of different exposure to nuclear and uranium coming into this year, because I thought that these small modular reactors are going to be the obvious next wave of energy to help, power data centers, and kind of a play on the trend that's driving markets. But you could own it without paying 40 times sales like you do for NVIDIA. There was a way to kind of have exposure to reality and what's going on with names that were kind of overlooked. I was long, what else coming into this year? Emerging markets. So even like not even overthinking it, just in like the EEM and like I think the EEMD, I think it is. A couple different emerging market funds with the idea of, again, diversifying outside the United States. What's the thought process? The thought process, if you go to worldpe.com, you can pull up all of the markets across the world. You can see where everybody's trading on a price to earnings basis. The idea was we're basically at the top. There's a couple other names with us, but we're 30 or 35 or whatever times earnings we're at. And then there's a bunch of markets, down that are trading, 8 to 15 times earnings. The idea is look at those names, look at, kind of diversifying out of the US. Because I do think that like from a monetary standpoint, even now, I was just listening to something this morning, like there's a bunch of currencies this year that are just, beating the dollar. Like even the Hungarian currency, the dollar's just gotten shellacked here this year so far. And so the idea is that, the productive capacity and the strength in the currency in these other areas of the world that have these much lower price to earnings ratios may be a better value. And so for me, I own like a couple of like Middle Eastern country ETFs. Like there's a Qatar ETF. There's I'm in Vietnam, Brazil, Colombia, a bunch of these different like up and coming, which I guess would be considered emerging markets. Just trying to diversify. Argentina, another one. Places where they've had crises and they're kind of recovering, or just as a means to own anything other than the Mag 7, really. So it's, and I do, have like hedge positions. I'll buy index puts and things like that occasionally. But the idea is not so much to bet on the crash tomorrow as it is to sidestep the absolute fucking lunacy that has gripped a hold of U.S. markets. And so, by virtue of doing that so far this year, at least, I've been outperforming the S&P. And I think that if the markets do wind up moving lower, I also like oil names, like I've owned Occidental for a while. I'm just in like a basket of like the oil super majors, Exxon, Phillips 66. Look, I mean, cash generative bread and butter companies, they pay a dividend. I don't have to worry about their balance sheets. They're in and of themselves like miners, hedges against geopolitical risk, which I love too. So not just risk of dollar-based risks. So the idea for me is, like I said, not so much to say we're going to crash tomorrow and let's short everything, but just to look where there may be value. And this happened during COVID too. Like during COVID, I was telling people, hey, like this is going to hit the US in December and it's going to be a big, it's going to be a big to-do. Markets are going to crash and people are going to be scared shitless. And people gave me endless crap about that for 2 months until eventually all hell broke loose. And then shortly after the hell is coming moment on CNBC, when the markets bottomed, I was out saying, hey, you know what's interesting? The major financial companies, JP Morgan, Goldman Sachs, all these names, because they were all trading at like 0.5 or 0.6 or 0.7 times book, which is cheap for big giant banks. And I knew it wasn't a financial crisis, at least like on a nominal basis, because the Fed was always going to be the lender of last resort. This was a different type of crisis. It was gonna affect consumer staple companies and things like that. So I was like, this isn't a systemic financial crisis. So I was like, oh, those actually look good. And since then, now they're trading at like, 2 times book, or some of them I think are even more. JP Morgan's gone bananas. Goldman Sachs gone bananas, just 4 or 5 years. I didn't hold on to everything as long as I should have. But the idea is that I'm not some like super permanent bear on equities that's walking around just, begging for a crash, or like, I'm actually a very optimistic person in real life. So it's funny to hear what I've written, because in my head, I can justify it very well.
But
and
you
it's
still
not
see the seismic crash happening, right? I mean,
I think that there's a far greater than zero chance of that happening. Yes.
Well, far greater than zero. I mean, that was on very compelling odds. That's very different from you saying you see a crash that breaks the minds of this generation.
First off, that is more than any of these dildos on television will admit, okay? So just to come out and say that it's greater than zero chance, okay, nobody on mainstream financial media is going to say that, all right? So even if it's a 1% chance, that means 1 out of every 100 guests on financial media should say that. And they don't. Not 1 out of every 1,000, not 1 out of every 5,000. In fact, the people who still make this argument that it's not even an argument for a crash. It's an argument that there's some common sense left, that there's going to be some return to some economic normalcy, and that we can't just give the finger to all of the natural laws of economics the way that we have here with modern monetary theory over the last 20 years, that at some point that hubris is going to catch up to us. So, look, and even if I tell you it's a 5% chance, if I tell you there's a 5% chance that markets are going to go down 70%, most people who think that there's a 100% chance markets are only going to return 8% for the next few years, that is a very strong statistical deviation from what they're thinking is possible going forward. So like, is it asinine to come out and tell you, I think we're going to be limit down tomorrow morning and that, we'll be down 50% by the end of the week next week? Yeah, that's like an asinine thing to say. Is it possible? Yes, it is possible for, like I said, reasons unknown. These black swans come out of nowhere. And we, again, have leverage on top of nonsense, on top of valuations, on top of relentless market cheerleading, one after the next, after the next, after the next. So again, the way that you're saying it is it sounds like it's pinning me as to say, hey, buckle up, the real crash is coming this week or it's coming this month. And really the message is more, keep your head on a swivel because it's a definite possibility and we are swimming in uncharted waters. And I think if people course correct 2% from that, then it's worth getting the message out.
All right. Fair warning to everyone. And look, as you say, you do have some winners that you do see doing very well. And, to your credit, the reason we have you on is because you've been very correct on your calls. I think you're outperforming by 40% with your pick of 25 stocks. I'll have to double check that. But let's talk about the gold miners, because that's certainly something that this audience is very interested in. And for the longest time, there was this idea of when are the gold miners going to catch up with the price of gold? That was a big frustration for the longest time. The GDX, the Van Eck Gold Miners ETF, that's up around 75% year to date. Newmont Mining, as we talked about earlier, that's up nearly 90% year to date. Agnico Eagle up 74%. So you've been talking about mispricing. With the gold miners popping now as they are they still undervalued? Is this the exception in your broader pornographic overvalued crash thesis? Are they where they should be? Do you still think that they have room to run there?
The idea for gold, like for me, and look, I'm a disciple of all these Austrian school guys, right? So I can just only tell you the way that it makes sense in my head. And if it doesn't make sense for you the same way, that's fine. But the idea for me with gold, and I said this, I did a presentation in like 2018. Whitney Tilson invited me to some event at the New York Athletic Club where I did this presentation on gold. And the idea was, I don't understand everything. I just understand that monetary policy to me seems like a Ponzi scheme. Okay. I've been working on, the short side. I've worked with professional short sellers for, more than 10 years. So I know the short world very well. And I know when something doesn't smell right. And to me, it was very strange when I was learning about macro in like 2010 or like 2000, maybe after the crisis or whatever, in 2008, didn't make sense to me that I was raised in a household where I understood saving was good, underconsumption was good, balancing your checkbook, debits and credits, all the basics. And then when you run a business, it's the same thing. You want a strong balance sheet. You don't want to spend more than you have. You want your revenue to be more than your costs. I mean, this super basic stuff, right? And then all of a sudden we get to the sovereign level and everything changes. And we're allowed to run this incredible $37 trillion tab. And actually, according to Paul Krugman, it's money that we owe to ourselves. And there's a big benefit. And we should take on more debt. There was a lady on MSNBC one day who was arguing with Peter Schiff. And Peter Schiff said to her, you don't get out of debt by taking on more debt. And the lady was like, that's just fundamentally untrue. And I'm like, what am I watching? So like, to me, the idea that central bankers understand where we're headed and how this is going to all end up, and that they can, if there's one thing we've learned from watching what's happened at the universities over the last 10 years, it should be that academia, while producing some fine specimens and, all of the great innovations of the world as we know them today, also produces a lot of overthinking and a lot of ruminating and jargon and bullshit and nonsense in the absence of an actual common sense, logical solution. So, because of that, and because I think that the idea that we're going to be able to micromanage the laws of economics doesn't make any sense to me, and because monetary policy and all of the brilliant ideas like Rashida Tlaib's idea for $1 trillion coin. Like, that's the best we can do. We'll just print $1 trillion coin and that will solve the $1 trillion problem. Could it be any easier? We print 10 $1 trillion coins. We got $10 trillion out of thin air. So like, this is actually like how these people think. So to me, that never made sense. So the idea in 2012, when I started thinking about this shit on the macro level, was, hey, I'm just going to own gold because it's got a 5,000 year history as being real money, which far supersedes and usurps any bullshit that the Fed has come up with. The Fed's been around 100 and something years, or okay, great, 110 years, whatever. But economics, and really the basics of economics, goes back thousands of years. And gold has been there every step of the way. So for me, it wasn't a big, huge stretch for my brain to think that this might be the foundation that is underneath, all of this nonsense. Like, our monetary policy now and our economy is like, if you were to go out and build a house, like a regular firm house in the 1970s, and then you just kept putting additions on it, like one after the other. It's like, okay, like, we're going to depeg from gold a little bit. Okay, we're going to depeg from gold completely. Okay, we're going to default on our gold obligations. Right. Okay, Greenspan's going to remember, we're just going to do a little monetary policy or a little quantitative easing just to like pepper it in, just to keep things good. Oh, and then that turns into QE2, which turns into QE3, which turns into QE4. And then all of a sudden, you have this tiny ass house with all these giant additions on it. And that house, like, at some point, like a gen, you're going to put one more thing on the top and the whole thing is going to fucking collapse. So my idea is just own gold because it's been there for thousands of years. It's going to be there in the future. And then I can just sit back and watch this insane experiment in hubris and, just complete arrogance and monetary policy. I can just see how it happens. When's the crash going to happen? Who's the Fed chair going to be when it all goes, ass up? I don't know, but like, I own gold and I feel like I'm getting the best of both worlds because with miners, I'm getting a cash flow stream. I'm getting dividends. I'm getting stocks that aren't aggressively valued, in my opinion. And I get exposure to the metal that's been there for the whole ride. When will I think about selling gold? I'll think about selling gold when the people on CNBC can't stop talking about it. And that hasn't even happened because they haven't even mentioned it.
The reverse Kramer index, right? When Kramer tells you to buy gold. Okay, look, I mean, Chris, you're certainly not going to get an argument from me about anything that you said. I'm Austrian economics proponent. MMT is as ridiculous to me as it is to you. Anybody who knows my work knows I'm very pro gold and pro Bitcoin. It's obviously a safe haven asset. It's obviously been there for thousands of years. Makes sense. Own it and hold it. I want to get back to the gold conversation, but just because I asked you about where you see the gold miners, want to pin you down on that answer, do you still think that they have room to run then? Would you add to your GDX?
Yes.
Okay.
I do. I have a recurring buy on my GDX position with one of my brokers that I have I've reduced a little bit, but I'm still buying. And in my like main core position that I've had for a long time, okay. I have not sold any of it. Again, I think that I'll think about selling miners, okay, when somebody like fucking Scott Wapner is talking about it, okay? Give me a guy who never mentions gold once, or, Josh Brown or one of these guys. Give me a guy who's a Stephanie Link, like, I'm going to take some gold miners. Like, give me somebody that's never mentioned gold before and acts like it doesn't exist, or like, a guy like Tim Seymour who ridiculed Bill Fleckenstein for buying gold years ago. Meanwhile, Bill Fleckenstein predicted the bond market was going to crack up, which it basically has done now, and predicted, Tim Seymour said to him one day, what's it going to do? Is it going to go to $2,000 an ounce? It's like, yeah, actually it's at $3,400 now. So like, give me one of those people on TV gripping the listener by the shoulders and saying, it's time to buy gold miners. And then I'll think about selling. But I think the GDX is much higher when that happens.
Okay. Again, I do want to get your thoughts on gold and the reset, but I want to keep it equity focused for now. And one of your correct calls is you had an NVIDIA and Intel pairing. And we did see President Trump saying that, the U.S. government is now going to have a 10% stake in Intel. And that you had a reverse pair trade with Intel and NVIDIA. Quickly talk us through that, because that seems to be coming through.
Well, that was actually the pair trade was something I just wrote about last week. The correct call that I made was that the Trump administration was going to take a stake in Intel. And that's what I made ahead of time. The pair trade was just an idea I had for last week, thinking like, hey, they're both semiconductors. Like, if you think that Intel now has the backing of SoftBank and the backing of the Trump administration, that, it may not be a terrible idea to go long Intel and short NVIDIA to try to, see if the valuation, basically the price of sales is what I was looking at.
So let's talk.
And it boils down.
Yes.
Go ahead.
So I think you're going to say it boils down to potentially, the government taking stake in companies. And that's something that you've written about. I mean, you're talking about a weaker dollar. Some would say that that's by design, as the Trump administration is trying to onshore manufacturing, trying to reposition. COVID really highlighted how problematic and how fragile America's productive capacity has become when the supply chains froze and we realized how little we actually make here, from pharmaceuticals to semiconductors. It was a national security vulnerability, a threat, something that the Trump administration is looking at. Now we have the U.S. government taking a stake in MP Materials, a rare earth producer that's critical for defense. That stock surged, 313% year to date. Now, you've written saying that this is a signal, hence you had that Intel call, that the U.S. is moving towards an economy where strategic industries are pulled closer to Washington through subsidies, protections, buying stake in them. So I want to get your thoughts on if MP Materials was a signal, as you said. Talk us through that 75 critical companies list and that piece that you put together, because I thought that was very interesting in terms of a potential blueprint of what's coming, especially when you take it in the context of the Trump administration saying that we need to onshore manufacturing, saying that we need to be more independent. So talk us through that.
So ahead of the government taking stakes in MP Materials and Intel, I had written about both of those names to my Substack subscribers, because the Trump administration had come out and said, hey, we're going to hold rare earth minerals close to the vest. And there was USAR and there was MP. And I had laid out, those. And I think UUUU was the other one to my subscribers, said, hey, here's the names you might want to watch. And then obviously the Trump administration came out and said they were going to take the stake in MP Materials. And, it's up, 200% or something this year. It was the same deal with
313, I think.
Right. So it was the same thought process with Intel, which is, the government wants to keep production of, and this all kind of falls under the umbrella of we don't manufacture anything here anymore. And so I think part of Trump's broader plan with the tariffs and with trying to, rebalance trade, and you can talk about whether that's a fool's errand or not, but the idea behind it is that we don't make anything here in the US anymore. And COVID laid bare exactly what we don't make here, because you would walk into a Target and there would be nothing on the shelves. And people needed medicine and they couldn't get it because the pharmaceutical ingredients came from China. And so we learned a lot from that. I learned how truly dependent our economy is on, things from overseas. Now, I'm not going to sit here and argue that like these insane tariffs on places like Vietnam are great ideas. But what I will advocate for is the idea that we do need to look at this for the first time ever. And it is a matter of national security, because, if we're not making everything that we need here to secure the country, then we're going to be at the behest of whoever's making it for us. So the idea behind the list that I produced, which was basically, look, the government's taken a stake in MP. I think that was around the time that they were discussing the stake in Intel. Here's 75 companies. So I think those two were on there. So here's 73 other companies that the government might want to keep close if this is what their playbook is going to be. People say like, oh, well, isn't that socialism? I'm not trying to argue whether or not the government should or should not be involved in these companies. This is what the Trump administration is doing. I voted for Trump. I'd rather be concerned about this and try to be addressing it in some way possible than doing whatever the Biden administration was doing before that. Like, God only knows. But the idea was to take 73 additional companies in all these different sectors: healthcare, technology, obviously defense, aerospace, commodities, oil, and say, all right, here's 73 other names just to consider. And I'm not saying it's definitive or it isn't, that the Trump administration may want to keep close to the chest. So that was the idea behind that article.
And given that you were correct, give me 3 names that you think have the most asymmetric payoff out of that list of 75 if the Trump administration doubles down on this strategy.
I hate doing shit like this because this is, I'm going to look like a fool now when I get these wrong.
Or incredibly correct.
Right, that's true. Yeah. If I get these right, you must subscribe to my Substack. No.
Well, you got honestly, the first 2 right.
That's true. And by the way, also too, I want to just note that Zero Hedge also had written about both of those names in advance also. And so, and I'm not sure what the timing was on that, but I know that they all, it wasn't like I saw their picks and copied them, and I don't think they saw mine and copied mine, but they were also correct. They also said that. Another name that they talked about the other day is the LEU, which is basically like a low enriched uranium processor in the US. So I would put that on the list because I think that the thought process is secure uranium supply for these new small modular reactors. You already have names like Oklo that are working with the Department of Defense and the Department of Energy. They're very, very closely tethered to the government already. So for me, I'm long some LEU. I think if I had to take a wild ass guess, and again, none of this is financial advice. Obviously, I'm not an RIA. I mean, look at me. You know what I mean? Like, but this is not financial advice. I would just say, personally, I think LEU. I actually thought the other day as I was making that list that Johnson & Johnson was an interesting name too. They are like the quintessential U.S. like staple healthcare company based in New Brunswick, New Jersey. They've been around for like 150 years. That's another like stock that I love. It's super boring. It's been trading at 150 forever. It's, cash generative. It's got a low PE. I thought Johnson & Johnson was like an interesting kind of staple name. And then I don't know, maybe Boeing, but really you look at a name like Boeing and like Raytheon and Lockheed, and these are pretty much all like already wholly owned subsidiaries of the Department of Defense. Yeah. So I'm trying to recall off the top of my head, but really, I guess LEU and J&J were the first 2 that came to mind from that list. And then I would actually say maybe even like one of the miners. This is something I talked about on Palisades Gold Radio a bunch of times years ago, the idea of if we return to some type of gold standard, that the miners would eventually be nationalized. And, is there risk in the miners being nationalized? I said this years before MP Materials, like we're talking about 5-6 years ago. So maybe even the miners, there might be some risk of nationalization. I don't know. Those are my 3 guesses.
Okay. Well, I mean, to your point, like a lot of these companies like Boeing that are in your list, Northrop, Lockheed, a lot of them live on government contracts anyway. So,
oh, you know what? Here, I'll give you another one because it just came to mind. I think maybe one of the cybersecurity names. I think something like a CrowdStrike or Palo Alto Networks. I think that a lot of I think there's Cold War kind of already taking place technologically. We see how we responded to Russia invading Ukraine through, basically cutting them off from the SWIFT system. And I think that similarly, other nations, rather than, start a nuclear Armageddon, are going to be more inclined to take the front lines of the battle in cyberspace. And this was actually in 24 or 23, I wrote about cybersecurity names, and the IHAK was the ETF. Palo Alto Networks and CrowdStrike were names that I liked for the year. I think it was 2023. They've done exceptionally well since then. I think cybersecurity is going to continue to be a serious, like at the margin theme. So my final answers are, if I had to guess, again, not financial advice, LEU, which is a low enriched uranium company, something in the cybersecurity world, Palo Alto, CrowdStrike, something cybersecurity related, and Johnson & Johnson. If I had to guess, those are my 3 names.
Okay. Thank you for putting yourself out there. And if you are correct, I promise you I will give you the due credit and props, and we'll be
It
singing
never
your
works
praises.
like that, though. It's never like you get two things right and then somebody asks you to it's like you bet the 1:00 football game, you win. You bet the 4:00 football game, you win. And you say, I'm unstoppable today. I'm putting it all on the 8:00 game, and you get torched in the first quarter.
Let's
You're
see,
down 40 to nothing.
But let's talk a little bit about like the broader implications here. I mean, firstly, do you think that this is drifting towards state capitalism, nationalization? I mean, what does this mean for a free market ideology that we stand for? Do you think that jeopardizes that in any way?
I don't think that Trump is a socialist. I'm not worried about it, to be honest with you. I think that he is strategically trying to realign the country. And I think what he's trying to do, whether it's getting the tents off the lawn at the White House or, stopping the millions of illegal immigrants crossing the border, or it's bringing production back to the U.S. And I wrote this about the tariffs. It was a heavy-handed approach. But to be honest with you, everything's going to feel like a heavy-handed approach when we haven't been doing shit about it for years. Okay? So when the accepted wisdom is it's okay for 3 million people to cross the border in a year or whatever it is, and then these people are allowed to come in and they're allowed to shoplift and loot and kill people, and that's fine, and we have DAs that won't put them... When that's the accepted wisdom, the idea of just shutting the border down and putting up a wall, which objectively by itself is not a stupid idea, it seems like, so why is he doing this? Like, this is insane, It's like, yeah, maybe it wouldn't be necessary if the problem hadn't gotten so out of control to begin with. And it's the same with what's going on in Washington with, first off, Washington's a federal territory. He's allowed to bring in the National Guard if he wants. All hell is breaking loose. The last time I was in D.C., I was appalled. I couldn't believe what it looked like. I hand to God, this is like 2 years ago. I got at a train station, there's fucking homeless people everywhere. Tents and this and that and the other. And I understand that this is like, it's a social problem and it has to be dealt with social services and it has to be dealt with humanely. And I get it. That's an argument. And another argument is this is the capital of the nation. And like, if there's anywhere in the country where optics matter, this is it. I traveled through Europe this summer and I went to like a bunch of different countries' capitals. We were the only one with homeless people in tents on the front lawn of the capitals. Everybody else is Parliament building, the Elysee Palace, and being in Budapest and being the Budapest Parliament building. All these other places are these great sprawling, majestic bastions and like wonderful points of ambassadorship for their country. And ours is you get off the train station in DC and you got a bunch of people shooting up drugs in tents outside of it. So does it seem like a heavy-handed approach to do that? Like, yeah, it does. But like, really, we need it. We're overdue. And the tariffs were the same thing. Like, was the calculation for tariffs asinine that he came out and used this formula, which was like, I forget what it was, like their tariffs versus us, plus or minus the trade deficit, whatever it was completely unscientific and completely insane. But like, and was it a heavy-handed approach? Like, yes, it is. But was it all terrible? No. Like, is it bringing in some revenue? Yes, it is. Did it put him in a power to negotiate a little bit with these countries? Yes, it has. Have some of these companies renegotiated deals? Yes, they have. Are the rest of them on notice? Yes, they are. We're still dealing with, India now or whatever. We're still dealing with China now. But like, they understand the posture that we've taken and the position that we've taken, which is like the deal as it exists today is over. It's not working for us. Like, yes, they say you can't break an omelet. You can't make an omelet without breaking some eggs. Trump's case is like, you can't make an omelet without breaking some eggs and possibly setting fire to the whole fucking house, But like, but they understand that like there's work that needs to be done. So, it's a heavy-handed approach, but it needed to be done. Go to northeastern Pennsylvania, go to Bethlehem, Pennsylvania, where the steel plants used to be. Go to Detroit, Michigan, and ask these people, like, go back to like near where my hometown was, where the Kimberly-Clark factory closed down. Like, it just, we don't manufacture anything here anymore, and we're not being compensated for that properly, and the politicians haven't paid any mind to it. So it is a heavy-handed approach, but you can't turn around the Titanic by sticking a little oar in the water and just trying to paddle. Like, you got to go fucking full reverse engines and flip the wheel 6,000 degrees in the other direction or whatever it is. And then you got to wait for 20 years for the thing to do a 180-degree turn. And that's what we've done.
Well, look, I mean, I think that's the broader point. And I do want to get your thoughts. I know you're talking about the crime in Washington, D.C. I know you're joining us from New York City, and we've talked about what's happening at the capitalist capital of the world. We'll get to New York City, but let's talk about this turning the Titanic, right? I see you shaking your head. I want to get your thoughts on that and what we can expect from the mayoral election. But let's keep it broader picture for now and what we're seeing in the United States. So we have what you're saying, an attempt to turn around the Titanic, but can it be successful? How successful can it be? I mean, certainly we needed to rebalance these tariffs, and we're already seeing trade deals signed and countries pledging to invest trillions into the United States, and companies like, Apple, arguably the poster child for global supply chain, saying that they're now going to build factories in the U.S. And we've got Scott Bessent saying that the tariffs have already generated about $100 billion since April. He's saying we'll get $300 billion more in revenue in by the end of this year. But, given where we are, given the scale of the debt crisis, given how far we are in terms of offshoring manufacturing, can we turn this Titanic around? Can the Trump administration pull it off? Do they have enough time, given term limits? What is your sort of bigger outlook? Is this something that could become a bipartisan issue? Several questions in one there, but I have a feeling you're going to riff on all of that at once. So the big picture, can it be done?
It's not going to be a bipartisan issue. You have one party that's pro-crime, and you have one party that's anti-crime. You have one party that's for keeping police on the streets, and you have the other one with this imbecile who's just got elected in New York who wants to get rid of all misdemeanors.
Hasn't been elected yet. Is the Democratic nominee. Hasn't been elected yet, but of course talking about Zohran Mamdani. But before we get on the crime, I'm talking about the Trump agenda to onshore manufacturing, to bring back American sovereignty, to try bringing tariffs, revenue and all of that. Do you think that can be successful? Can we turn around that Titanic, as you put it?
Well, the pros are, right, that he has Congress, and so he can try to get through as much as he can now. No, I think it would take 8 or 12 years at least. And so I think a lot of it will hinge on winning 2028 too. Hopefully people understand that, what he's doing is necessary. And they afford the Republican Party the ability to try to continue down that path. And, hopefully, I love J.D. Vance as a candidate. I think he's exceptionally intelligent. I think he's super sharp. I think he, absolutely crushed his debates heading into this election. I would love to see him as our next president. I think that he would probably do a good job kind of staying the course and staying down this path. But what will happen is if the Democrats are elected in 2028, they will seek to immediately undo everything that the Republicans are doing now, similar to how Trump got into office and undid as much as he possibly could do from the Biden administration via executive order. And so, it's just a question on whose set of ideologies do you believe are, should be more of a priority. But no, I think that if you want to talk about something like the country's fiscal course or cutting spending or growing our way out of our debt problem or onshoring manufacturing or getting law and order in the country, like, really tightening up like immigration and the border, I think all of it probably we'd be better off, in 8 or 12 years than in 4 years. But give the Trump administration a lot of credit for doing what they're doing. I know, for somebody that didn't really give a shit about politics 10, 15 years ago, I felt extremely exasperated at the end of Biden's term. Not only do I find his policy positions grossly incompetent and bizarre and ridiculous and completely anti-American, but he was like, if I had to watch him like parade like his lifeless corpse up on stage one more time and have the mainstream media tell me that he was like the sharpest he's ever been, I mean, it's just like, it's so fucking humiliating for our country to like, for the media to be saying that. Like, could you imagine being a foreign leader? Could you imagine being Viktor Orban or like one of these guys, surrounded by your advisors who are all super smart, and you're watching a live satellite feed of like Biden during this debate where like everyone in the media has been praising him and saying what a great job he's done. And he gets up there and he can't fucking put a sentence together. Like, you can't talk, let alone like set policy. Like, these people, like, how embarrassing, how humiliating is that for a country? It's like having the tents on the lawn of the White House. Like, at some point, even I put on a button-down shirt once in a while. You know what I mean? Like, I'm covered in tattoos. My whole shtick is like, I just dress like however I want, which I do. But you know what else? Like, I'm 42 years old. Like, sometimes when I leave the house now, like, I want to just wear a button-down shirt. I respect you as a journalist. I love your show. I love Andy Schectman. Like, you're in the top 5 people I would ever want to talk to about any of this stuff. So I put on a sweater for you. Like, sometimes
with a collar.
Have to, yeah,
with a sweater with a collar and buttons. Yeah, it's almost a collared shirt.
Sometimes, like, the optics do matter, and I hope to God that the country understands this and that they afford the administration 4 more years. Even if they want to gum up the works in Congress, in the House and the Senate, we lose the majority somewhere, and then, okay, that'll kind of grind the gears a little bit slower, but hopefully he gets through as much as he can here in these first 2 years, and then we'll see where the dust settles after that. But it is the country was headed light speed in the wrong direction. So, you see Spaceballs when he pulls the handbrake and he goes flying into the front of the ship like that. That's what you got to do at some point. It takes a while to stop. It takes a while to turn the Titanic around.
Okay, but you're saying it can happen, and hopefully, according to you, if we get a Republican administration continuing the legacy. Look, J.D. Vance has made it quite clear that he thinks that sometimes being the world reserve currency can be problematic. I chatted with Luke Gromen about this in the context of Triffin's dilemma and the idea that, if you're the world reserve currency, you have to run persistent deficit to keep the world supplied with dollars. But over time, those same deficits hurt the economy, undermine the dollar, because it challenges the fundamental of the economy. And that's certainly what we're seeing now, which is why there is a case to be made that they want a weaker dollar on purpose in order to facilitate onshore manufacturing. Where I'm going with this is back to the conversation of gold and the reset that you think is an inevitability here. Because if you have a weaker dollar, it does then challenge your ability to be a reserve asset at the same time, right? And someone like Luke Gromen has proposed having a neutral reserve asset like gold, maybe Bitcoin, and he thinks that this could be potentially the direction that the Trump administration may be moving into. So what are your thoughts on that? You said you do see this reset happening.
My thoughts are, as I've told my subscribers, and I love listening to Luke Gromen. I think Luke Gromen is much smarter than I am. I'm happy to take his interview appearances and constantly pass them off to my subscribers on my Substack with a little bit of commentary from me and a lot of what Luke Gromen said, because I think he's got it dead on, and I think he can articulate it better. He knows the Eurodollar system better than I do, and generally just has his shit together more than I do. So I think he's dead on right, though. I mean, I can't with specificity break down to you exactly how the Eurodollar system works and how the world needs to be flooded with dollars and how foreign banks create dollars from loans and all these things. To me, though, it does feel like we are heading towards some type of terminus for the dollar because, we have exorbitantly abused our privilege as global reserve currency. The next thing that we're going to do is we're going to have to peg it to something with a finite supply. We're going to have to peg it to something that is going to give it some semblance of a foundation, because The idea that our Fed governors are running around on 60 Minutes and saying, the Fed has infinite cash, like, yeah, okay, like that's nice to ensure people that the ATMs aren't going to stop spitting out money. But like, what is that going to be in 10 years? Are they going to be $1,000 bills? Or are they going to be $10,000 bills? Like, so I would defer to Luke Gromen. I would recommend that everybody turn your interview with Luke Gromen on and watch that. Because you just get that feeling like, there's some libertarians kind of in the orbit of the Trump administration. And then you got all the crypto people too. Bitcoin has kind of forced people to consider monetary policy in a way that they haven't before. Maybe 20 years ago, 1 out of every 10 people on the street could tell you about monetary policy. Maybe now that number is like 2 or 3, because you have a whole generation of like Bitcoiners that in order to understand Bitcoin, you have to understand monetary policy. And so I think the people are going to demand sound money, and they're going to demand money backed by something in the future. And so you combine that with the fact that, like I said, Trump's got a lot of Republicans around him, but he also has like this group of like libertarians that are with him that have kind of followed over from RFK. And he's always like, at one point I saw a couple of weeks ago that he was, somebody was speculating about the idea of a gold-backed treasury bond. But I just think in general, from a broader perspective, it just has to happen. Like something has to give here. Our fiscal situation is completely out of control. Monetary policy is completely out of control. We've done this for so long that you just kind of sense it. Like, I don't need to understand the Eurodollar system precisely to sense that, like, at some point we're going to need to have, a Bretton Woods or a Plaza Accord or a Mar-a-Lago Accord or some type of debt jubilee to just kind of try to get both feet back on the ground as it relates to the currency again. But I'd be lying to you if I told you I have an opinion about exactly what that's going to look like, other than I think the obvious. It will rest on gold, and it will rest on silver, and may rest on Bitcoin as well. But for me, I'm more inclined to just say gold and silver. I hope it rests on Bitcoin, for the Bitcoiners. I hope that becomes the standard. But and I'm happy to just own those assets and sit back and kind of watch this case study play out in real time.
Okay, so you do see gold definitely having a role in this reset. I think when you look at central banks around the world. Yeah.
I think it has to. I think it feels like now that there's a race between the central banks to acquire gold. And, for a long time, it's been speculated that China has significantly more gold holdings than they let on. And, I know like a year or two back, there was speculation that the Saudis were faking the amount of, gold imports that they have. And, gold's always been very important in places like India, and you get places like Russia that we've weaponized the dollar against. And you think, okay, like it's got to drive them towards gold. And so, I don't know. To me, there's a reason central banks hold gold in reserve. And I said this in 2018 when gold was at $1,300 an ounce, and I was making my case that it just feels like a Ponzi scheme, so people are like, well, why gold? And I say, okay, because like the central banks hold gold in reserve for a reason. They know that that's their backstop, right? Like Ben Bernanke said to Ron Paul, well, it's long-term tradition or whatever, and Ron Paul's like, well, why don't you hold diamonds? And it's like, yeah, why don't you hold diamonds? Like, there's a reason it's gold, because gold is real money and has been real money for thousands of years. The central banks know it. I'm not smart enough to explain the plumbing of the Eurodollar system, but I know that when I watch all of the major central banks in the world stacking gold, that tells me that, hey, the likely candidate for the next, monetary reset is going to be gold.
So on that note, do you have a forecast for where you see gold going, say, in the next year and then in the next 5 years?
Not a precise forecast, except higher. It's been consolidating here over the last, look, I'd love to tell you, I'd love to talk to you about resistance and support and trend lines and moving averages and the RSI and stochastic indicators and all this other happy horse shit that people talk about. But really, for me, it's much simpler than that, which is if we're going to, continue down the path where we're going to try to inflate our way out of our problems, as everybody says, it's not gold, getting pricier. It's the dollar getting weaker. So I think in nominal terms, gold prices will continue to go higher. And then if, we do wind up pegging gold to the dollar at some point, or we wind up coming up with a basket of items that we're going to, peg to the dollar, I think that will drive the price of gold up significantly as well. So, for me, I feel very confident in just holding gold, buying it on dips. I don't think it's a coincidence that it has rallied so significantly over the last couple of years. If you look at the trend line between gold and real rates, it decoupled like a couple of years ago. I think maybe right after the infusion of all the COVID cash, because I think that the sentiment out there is the system is FUBAR, and now it's just the time to just kind of batten down the hatches and head back to the monetary instrument that we've known for thousands of years has been the safe haven. And which is to say nothing of its geopolitical hedge also as well, which is just another added feature of gold. But yeah, I mean, look, I'm one of these people that came to gold and silver and became a metals person and an Austrian school person, not because I didn't have the mental horsepower to understand the modern monetary theory position, but just because it didn't make sense to me. So, people talk about this all the time with people like Peter Schiff. They accuse him of like, oh, well, you just want to sell gold, like you just want to sell gold. And he says, and I know Peter, I know him. I consider myself friendly with him. I've spoken to him not in public, situations before. And the truth of the matter is he came to gold because he believes the monetary system is broken, not because, he said, okay, I'm going to go be a gold dealer and then I just got to sell this regardless of whether or not I believe in it. So, his convictions are honest and he comes by them honestly. And, it's the same with me. Like, again, it's just how I was raised. I was raised in a house where my mom balanced her own checkbook by hand, and I would learn to, about interest and savings with like a junior bank account, like when I was young. And to me, the world that I was raised in and listening to, reading like Basic Economics by Thomas Sowell and those types of textbooks, like to me, it just doesn't make sense what we're doing. And so, and there's been nothing along the way that I've heard from the MMT crowd that has made me really double back and question whether or not I'm missing something. Because it just, on the contrary, I've heard things like, we do pay off debt by taking on more debt. And it's like, oh no, like, how could you be so misguided or Stephanie Kelton, like the deficit myth, it's like, oh, what is the deficit doesn't exist now, because you wrote a book. It's like, some point, somehow, there will be a blow-off valve where we have to pay for our sins of years past and are straying off the path of basic economics. The only question is trying to figure out what that's going to look like and when it's going to happen.
Yeah, that's the big one. When, for sure, and what it looks like. But it does seem as though consensus is moving in the direction that something's got to give. And it's become a more mainstream topic of conversation that we could see gold re-enter the system somehow, that the U.S. may actually revalue its current gold reserves. The Fed wrote a paper about it. As I've talked about in previous episodes, people in Trump's inner circle have been speaking about a gold revaluation, perhaps some kind of gold-linked treasury that may create more faith in the treasury system, although it will sacrifice the dollar effectively. So there does seem to be, a move in that direction. I know that's not necessarily your field of expertise, as you've told me before, that the when and the where and the how is not something you want to weigh in on specifics, but that you do see it happening. But I do want to get your thoughts, though, on where you see Bitcoin fitting in here, because I know you're a recent-ish a believer in Bitcoin. And we had the U.S. Treasury Secretary Scott Bessent make some very strong pro-gold comments. He has said that, they're going to monetize the asset side of the balance sheet. He has called himself a gold bug several times. He has said that he does see a Bretton Woods kind of realignment happening. Again, we've covered this at length in previous shows. But also recently, we had Bessent posting on X that the Bitcoin seized and forfeited to the federal government will form the foundation of the president's strategic Bitcoin reserve, which we knew would happen. But interestingly enough, he said that they're looking for ways to acquire more with budget-neutral pathways. Bitcoin has been finally forfeited to the federal government, will be the foundation of the strategic Bitcoin reserve that President Trump established in his March executive order. In addition, Treasury is committed to exploring budget-neutral pathways to acquire more Bitcoin, to expand the reserve, and to execute one of the president's promise to make the United States the Bitcoin superpower of the world. It's quite a statement. What's your read on that? How do you acquire more Bitcoin in budget-neutral pathways? Do you see Bitcoin playing a role in this reset alongside gold? What's your take?
My take is that I think Bitcoin is obviously more speculative than gold. I think that it's another kind of unprecedented introduction here to the technological and monetary world, kind of a hybrid of both. I think that, to me, ideologically, Bitcoin holds a lot of promise. In practice, it's going to be determined by, whether or not the adoption continues, frankly. It's the network has survived for, 14 years or whatever it is now. If it becomes the basis for a new independent monetary system outside of, Swift and outside of, all these other widely adopted, it already is. It already is a network that exists outside of Swift. That's the basis of its appeal. It's peer to peer, and so it's not centralized anywhere. But I think as long as countries continue to embrace it, that it's predicated on the size of the network and the adoption. And so if the network continues to grow, Bitcoin will continue to grow. And if the network starts to shrink and adoption slows up, then, Bitcoin's going to go in the other direction. So I don't think it's a terrible idea to hold some in reserve that the government already has. I don't think that is too risky. I would be, far more worried about the government, diverting $1 trillion in tax revenue to buying Bitcoin, just because we don't know. We don't know, like, if it will survive the age of quantum computing. We don't know. There's all these unknowns. So for me, when I look at Bitcoin versus gold, I understand the case for Bitcoin. And certainly ideologically, Bitcoin's appeal to me as being an off-ramp from the monetary system as it exists today, and kind of being a tool that can return power to the everyday individual who has been mercilessly bludgeoned by monetary policy and inflation. Its appeal to me, as an instrument that can return some power to the everyday person, is wonderful. And that's part of the reason I decided that I was going to own some and, become friendly with the Bitcoin community, because, at some point you just have to hold your nose and have faith that Saylor said, there's a lot of things I don't agree with Saylor on, but like in one of his interviews, he said something to the effect of like, okay, like, the system's broken, but like, what are you doing? What are you doing about it? Like, what are you doing to fix it? And that kind of stuck with me in the sense that, like, this is really a potential pathway to democratize sound money and force the rest of the world to calibrate itself to some type of sound money standard that it hasn't in the past. And, I do think, I find it interesting that it exists kind of on the margin here, where everything is on the cusp of becoming digitalized. Again, I don't know whether or not that's ultimately going to be a pro or a con. Like, certainly I would argue against the central bank digital currency. But a decentralized peer-to-peer digital currency, that holds a different type of appeal to me. So it feels to me as though, and look, again, to defer to Luke Groman, who's much smarter than I am, and people like Lynn Alden, who, and Larry Lepard, and all these people that I know, and I know enough to know that they're smarter than me, to see them embrace it. I think it feels to me, without being able to nail it down, I just have a sense that it feels like an idea whose time has come. And I hope that I'm right. And I hope that that's the case. However, the way that I am positioned in Bitcoin relative to the way that I'm positioned in gold is I have a far larger gold position than I do Bitcoin position. I understand it better. It has a much longer track record. I'm far more confident in it, by factor of maybe 90 to 10. And so far this year to date, like that's been the right positioning also too. Like miners happen to be outperforming Bitcoin this year. Guys like Larry Lepard will tell you they want to be 50-50 or something because they know that Bitcoin's the fastest horse in the race. And that's fine. For me, my risk tolerance does not allow me to do that. I'd much rather have that exposure in something like miners that I'm far more comfortable with. But, as far as like why I came around to Bitcoin, I understand the network. I understand, the basics of how it works. The appeal of peer-to-peer is very real. The appeal, of being decentralized is very real. The appeal that the more people that participate, the stronger it gets is very appealing. It's the digital equivalent of the phrase "power to the people." I mean, the wider of it's adopted, the more secure it becomes, the more prominent it becomes. So we're at a very interesting point where the Trump administration is kind of threading it into the financial system now, which, look, if we remain the world reserve currency, maybe it means one thing. And if we don't, maybe it means another thing, but to me, I just have a sense that there is a possibility that it could be an idea whose time has come. It reminds me a lot of the internet. Larry Lepard makes good analogies with Bitcoin in the internet. And, for the things that I don't understand about Bitcoin, I can draw analogs in my head well enough from, the first days of using a green screen AT&T Unix terminal to send email in 1988, and then go from there forward to Netscape Navigator to now I can control my fucking toaster on my phone, so, when the Bitcoiners talk about level 1, level 2, level 3, I can understand what the pathway of digital evolution could look like for Bitcoin. But to tell you that you'd write a book about it and that I, could lay out the intricacies of the cryptography for you or tell you exactly how it's going to happen, I can't. I'm frankly too lazy. And I, like owning gold, would much rather just own a little and then just see what happens. I understand it to know that it's probably not going to go to zero tomorrow. But past the short and midterm, I don't know what it looks like. I do know that if it does take hold and it does wind up empowering the whole world to understand the problems that I have been bitching and moaning about for 15 years, and I'm not a part of it, I'm going to be pissed off. And so that is part of the reason that I own some. Because again, like Saylor said, what the problem is. What's your proposed solution? Gold standard to me makes a lot of sense. Does it make more sense than a Bitcoin standard? Yes. I think to me in my head, gold usurps Bitcoin. There's a million Bitcoin people out there that'll tell you a million reasons why I'm wrong, but that's the way I make sense of it.
Okay. You don't see something being pegged or backed by gold, though, necessarily. When you say
what do you
gold
mean, like
standard.
Currency?
Yeah, I mean, when you say gold standard,
I think it's a possibility. I mean, we're going to have to peg the currency to something at some point.
But not redeemable, not back, not like back in the day, how we had it before Nixon took us off the gold standard. Or maybe
not
you
for
do
everybody.
See it like that.
Maybe just for maybe just for certain like large institutions or for just some dealers. I don't really know how they would do it if they would just essentially have a certain amount of gold in a certain place and then kind of say X large banks are going to take X amount or have X amount like relative to the currency out there or the treasuries that are in circulation. I know that in a situation like that, all of the descriptions I've heard from people that know much more about it than I do always wind up with, them having to peg the dollar to gold at a much higher price. And that's where you see all these people that talk about like these $35,000, $50,000 an ounce price targets. It's always at the ass end of some thesis where the government, basically reinstitutes a gold standard.
Do you see, though, gold and Bitcoin as being mutually exclusive? Because do you see a system where you can have gold and Bitcoin in some bigger reset?
Yeah, I do. I think that they coexist now, and so I don't think there's any reason to think that they couldn't coexist if they were going to be used, as part of a basket to, peg to whatever the currency or treasuries or whatever. We just have to do it in a manner that indicates or that acknowledges the fact that Bitcoin is still far more speculative than gold is, right? So, maybe we peg something 98% to gold and 2% to Bitcoin. I don't know, because to me, I still think that there's risks inherent with Bitcoin. The fact that it's digital in nature, the fact that, we do have a new era of quantum computing coming down the pike that basically, to the best of my understanding, the security behind Bitcoin is reliant upon the miners and the nodes that are used to secure the network operating with the most advanced, technologically advanced hardware possible to do the mining equations that are necessary, which is why you have all these specialized silicon chips used specifically for Bitcoin. So if something comes out in left field and can just usurp that, and people say, oh, well, if quantum computing is going to hack something, they'll hack the Department of Defense first because they can hold the nation ransom with its nuclear arsenal before whatever. Yeah, okay. But also too, as Bitcoin continues to grow in size, ostensibly, so does the bounty for figuring out a way to compromise the network. And so, that's a $2 trillion bounty today. And if it becomes a $10 trillion bounty, who knows behaviorally who that could motivate to want to, anonymously essentially move value in the network. So I think there are far more inherent risks, but I do think that they could coexist as long as we are careful about understanding that a 5,000-year track record and a 13-year track record are completely different. And they have two, again, there's things that are better about Bitcoin than gold. The fact that it can be, transferred a hell of a lot easier, right? You're not going to walk around with X amount of gold in your backpack. It's much easier to just zip somebody over a significant sum of money through the Bitcoin network that'll verify in 30 minutes or an hour than it is to try to get, 100 kilos of gold onto a fucking airplane or something. It just doesn't make any sense. So it does have its benefits, but I still think that if they're going to be used together, personally, if I was advising somebody on that, I would make the case that it needs to be predominantly gold and silver, or things with a much longer
track record.
Exactly.
Much longer track record, stood the test of time for thousands and thousands of years. You mentioned quantum computing as a potential existential threat to Bitcoin, challenging the cryptography there. I like to throw this question out to guests. Do you see an equivalent for gold? Is there some kind of existential threat to gold? What would that be?
That would be mining asteroids, if you ask me. That would be, I do think that this is never talked about either too. But because I like to analyze and because I like to come up with best and worst case scenarios, I think a worst case scenario for gold is somebody figures out a way to mine an asteroid for, 5 quadrillion ounces of gold. And then we can just keep doing that ad infinitum. And then theoretically, the amount of gold out there in the universe is endless. So we could just,
Well, the argument is that it's too much energy, it's too much power to do it, and right. And it wouldn't justify it.
But at some point it could become, worth it.
Does it become worth it if you then expand the supply so dramatically that you can no longer charge the amount of money that's worth it? It's kind of like a catch-22 there.
Yeah, but it all depends. It depends on the motivation of, are we just going to mine it just to have more of it, to hold it in reserve? Are we going to be mining it because it needs to be used in production in some type of specialized, aerospace or computing needs that we don't even know that we have yet? I'm talking about obviously we're talking about decades into the future, right?
Okay.
And so we don't know what the use case will be for it in the future. It's used in a lot of electronics now. Silver is used a lot more in industry, but you asked for an existential threat.
I did.
I think that the answer is at some point in the future, we may figure out a way to make the economics of it work where we could just, mine asteroids for gold. And we wind up with significantly more like major supply shock.
Okay, and I appreciate your intellectual honesty and the fact that that is something that you have indeed contemplated.
I don't know if it was intellectual, but it was honesty.
And that's what we like about you, because you are honest. You do mix like humor and blunt truth in your writing, which is why people like your work. Quoth the Raven, inspired by Edgar Allan Poe, I believe. If you had to give a headline to describe the times that we're in right now, like people looking back in 10 years' time, having the advantage of hindsight, what would that headline be?
Unprecedented.
Unprecedented.
That's
okay,
it.
one word headline, good enough.
Well, if you think about it, the country has never been where we are. The entire monetary policy experiment that we are in the midst of is unprecedented. It's never happened. We've never been in this day and age. We've never, been as technologically advanced as we are now. This is barring the like interstellar thesis where it's like, hey, actually we've lived this 1,000 times before. Okay, fuck that. But like, we've never been here before. We've never had monetary policy the way that we're doing it now. We've never been able to digitally create money out of thin air. There were examples in history of, inflating the money supply, but never the way that we could do it now. Like I steal it from at some point years ago, and he may not even remember this. I was talking to Jim Chanos, I think maybe just on email or something. And I just said like, what do you think about whatever Yellen's doing or something? And he just wrote back to me or said to me, I don't remember what it was, if it was in person or not, but he just said like, it's an unprecedented experiment in monetary policy. And it's going to have unprecedented results. So that means that we have no idea what's going to happen. I'd love to sit here and sell you certainty. I would love to do that. I would love, but the great thing is like the people that read my Substack know that I don't know. And they're okay with that because they would rather me tell them, look, I don't understand this, or I don't know the timing, or listen to Luke Groman. He's much smarter than I am. So when I try to find historical analogs for what we're going through now, like specifically the United States, being the global reserve currency and in the fiscal situation we're in, like, I don't know, it's very difficult for me to find. And so to me, unless somebody wants to present me with a case that says, okay, like, hey, Pakistan was in this exact same situation and here's what happened. It's like, okay, I'll look at that. But I know that they haven't because it's never been 2025 before. So the idea that you're going to listen to a bunch of people on television all day tell you with certainty that they know what's going to happen. Look, Michelle, every time there's a problem, every time a fraud collapses, every time a Madoff happens, every time the housing market takes a shit, every time COVID collapses the economy, every single time, nobody saw it coming. Inflation was transitory. And then all of a sudden it turns out it's not transitory. The Fed has never predicted a recession, right? So like we're flying completely blind. And anybody that tells you otherwise is lying to you. And so, don't listen to me. Don't listen to any of these people. Just try to like think for yourself and try to allocate 5% of your brain to the idea that things may not be as perfect and utopian as everybody is inclined to make you believe. Which is why when you do have these like, oh shit moments, you get anchors on the CNBC desk that like have to run off in the middle of a hit because like, David Faber the one day, I got to make some phone calls, and just kind of like ran off the desk. It's like, oh my God, like he, tell if he's going to go puke into a bucket somewhere or like what, but like or like Scott Wapner during COVID, who put out a tweet that was like, we should just shut down the financial markets. So Scott Wapner tweeted out during COVID something like, we should just shut everything down and start over in a couple of weeks or something like that. It's like, what the fuck are you talking about? Like, shut everything down and start over in a couple of weeks? Like, these people are not prepared or conditioned for the idea that anything wrong can happen, and they're not prepared or conditioned for any type of discomfort, or any type of like, anything outside the norm. Not one standard deviation outside the norm, 1/1000th of a standard deviation outside the norm. So the idea is we're in unprecedented times and we're going to get unprecedented results. So expect the unprecedented, and like maybe you won't wake up with your balls in a vice grip one day when the rest of the world is.
Expect the unexpected, and to prepare for that, you're doing what?
Me, I don't know, like in finance, in life, like, personally, I just try to stay diversified. I try to, create redundancy in areas of my life where I don't have all my eggs in one basket. And that's not just, that's not just with my investments. That's with everything. I try to just, look, I'm a little bit of a prepper, right? I'm a little bit of like, I don't trust the system kind of guy. And so for me, that, like, for example, when the cases started to show up in late 2019 for COVID, I was going to the same place for lunch every day, and they have Fox News on every day. And every day there was a little thing on the crawl on the bottom that said like coronavirus cases 20. And then the next day it was like coronavirus cases in China 100. And then the next day there was a little thing, coronavirus cases in China 1,000. And so every day I'm going to the same place and I'm eating my salad and I'm watching this thing and I'm watching the fucking thing go by every day. And it's like 10, 100, 1,000. I'm thinking to myself like, okay, I know how this goes. I know it comes after 1,000, 1,500 or 2,000. And then I start thinking to myself like, wow, like there's flights going back and forth to China. Like obviously this is like a communicable virus because the numbers are going up and not down. There's 10 billion people over there crammed into like 1 square mile. And then you got all the universities going back and forth. It was around Christmas time heading into late 2019. I'm like, just a matter of time before this shows up in the US. So what did I do? I tweeted out a pandemic preparedness checklist because nobody had any clue what it was. People didn't know if it was the flu or if it was Ebola. We didn't know anything about it. So I went to the store early. I, talked to my friend Doomberg at the time about like, what he would buy in a situation like that. He was also doing like similar kind of preparedness stuff really early. And I bought some water filters. I bought this, that, the other. I had some stuff at the house already that I was, planned for an emergency for just in case, probably more than most people. But then, I felt great going into late December. The only thing I had to deal with was fucking these gnats that were like blowing up my Twitter inbox telling me what a fearmonger I was and how misguided. I had one guy call me and say like, my wife's a nurse at Queen's Hospital and you're blowing this whole thing way out of proportion. I'm like, dude, how the fuck did you get my phone number? Like that was the only problem. I had to deal with people telling me that like, I'm being too prepared and I'm too much of a fearmonger for suggesting people take an iota of caution. And then all of a sudden we woke up one day and people were fist fighting over toilet paper at Costco, like I said. So like for me, the way I go about my life is I try to stay redundant. I try to, make sure that I'm not limiting all my options in one place. And this is, again, why I think about diversifying banks, not just like, diversifying how my portfolio is, but like, do I have portfolios across several brokerages? You think about things like counterparty risk. Like are these people going to be able to make good on just different levels of risk that most people don't think about. And, I think that's by my nature. I'm a little paranoid to begin with, but I think I've earned the right to be paranoid because I worked in the short side of markets for a while. And I've seen a lot of very, very egregious fraud. Not like we're fudging the numbers on a balance sheet, like our factory that we're supposed to have in China doesn't fucking exist. Like that kind of fraud. And I've seen it over and over and over, and it's pervasive. And there's thousands of frauds out there now that have yet to be discovered. And I know that people lie, and I know that people fake understanding, fake that they understand what's going on when they don't, which is what I think, mostly the Fed is doing, to be frank with you. And I know that people are impressed by intellectual sounding jargon and bullshit, whether or not it makes any type of circuitous, logical sense. So just from, studying human behavior and watching these things take place, I am more of a cynic, more of a skeptic, and more cautious than most people out there.
All right. So expect the unexpected, be prepared, diversify. And as we wrap up here on that note, Chris, what is your highest point of conviction right now?
Oh, Well, that's a great question. Actually, dude just asked me this a couple days. The guy from Stansbury just asked me this too. I don't even remember what I told him, so it must not be that high of a point of conviction. um, Trying to think, like, I would have said like the things that I said at the beginning of the year this year, which was gold miners, nuclear. I think all of these trends are like still like firmly in place. They're not just they're just not as like deeply undervalued as I thought they were at the beginning of the year. Um, I think that, man, highest point of conviction. I don't know. If I had to pick one thing and I'm just going based on the data, which is like where my money is, I was probably still gold miners. I think that they're still in an uptrend. I think that they have not just upside from the price of gold, but I still don't think that they've caught up to where the price of gold is today. I think that a lot of analyst models and price predictions for gold and for what these miners are going to make in the future are still far too low, which is why I think these companies like Pan American, like Newmont, are blowing away earnings expectations. I think that expectations are still low. So I think that those are, they're still attractive to me in the sense that I haven't sold them. And for me, I'm not sure when I will. It would really have to be a fever pitch, everybody like buy gold moment. My highest point of conviction is in general that I think the Fed is stuck. And I think that I don't think the next 5 years in the US are going to look like anything of years past. Like maybe the markets won't crash in nominal terms and, they'll double over the next 5 years, but there's going to be major distortions elsewhere in the market. And so for me, something like diversifying into emerging markets, which is another, still think is also something very attractive to me. Getting out of the dollar and, picking select equities that I think have asymmetric upside. For example, psychedelics. I think, RFK Jr. could help move psychedelics along there's a lot of companies that are in the late stages of like phase 2, phase 3 trials that are showing some excellent results. Some like little pockets of asymmetric potential upside, but tried and true, like for me, defensive, like what do I own? I own UPS, which is like 12 times earnings, 4% dividend, like kind of a staple company, part of the duopoly with FedEx, not a ton of competition, may get hit in a recession if online shopping goes down, but like is more than likely going to be there in 50 years. So I don't mind holding it. I look at names like that and, like I said, gold miners, silver miners, and that's it.
All right, that's quite a lot. That's quite a few points of conviction that you've given us there. Chris, where can people find you?
I like this LEU too, this low enrichment uranium name.
In your 75 critical companies, yeah. See, I'm glad I held your feet to the fire on that one.
Because we're gonna need this type of uranium for these small modular reactors that I think are the next step in energy. I do think that it's already been decided and nuclear is next. It just makes so much sense. You could generate such significant power from very little, and it's environmentally friendly. I think nuclear is like a very obvious choice. I've actually been writing about nuclear for like 4 years now, I think. And to me, it just makes so much sense for adoption. It's just getting out of the shadow of like the Fukushima disaster and those things happen and you get this like really bad PR, but in terms of actual like safety track record, nuclear is quite safe compared to other sources of energy. So do think that's going to continue. And if I had to pick one name, maybe this LEU. I had picked Oklo last year when it was at $5. It's at $80 now. So I can't say like Oklo. It's a great American company. I like Sam Altman. I think they're going to do great. They're tied in with the Department of Energy and Department of Defense very closely. But for a company that's not posting any revenue yet, for it to make that enormous run, I'd be more inclined to look at a company like LEU, which is actually generating cash right now. Still, I think trading around 30 times earnings, but at least cash flow positive, and I can see the what the total addressable market I think is going to be for it expanding going forward. So
Right. I mean, that's a whole segment in itself. Uranium, it is one of the few areas that there does seem to be bipartisan support on. But we will have to do a whole other segment on that because we're out of time. So, Chris, as we wrap up, where can people find you? Where can they learn more about your next highest points of convictions and everything else that you have to opine about?
Yes. Well, I have a Substack. It's called QTR's Fringe Finance. It's quoththeraven.substack.com. About half of the articles are things that I aggregate and curate, stuff from friends of mine and, think tanks and things that I enjoy. So I pass along with permission. And about half of it is my original content that I write myself. I write usually columns 3 times a week, maybe. Sometimes it's about politics, sometimes it's about financial markets, but really what I deem interesting. But the most important part of my Substack is my disclaimer, which I will give now also to your watchers, which is like, look, please speak to a personal financial advisor. I'm not a professional. I hold no Series 7, no Series 63. I'm not FINRA registered. I have for your purposes, I have 0 qualifications. Okay. I can talk a little bit of shit about markets, but please, none of this is a solicitation to buy or sell any of the recommendations that I talk about today. They're not recommendations. They're just things that I happen to have opinions on. And I say that to all my Substack subscribers too, because quite frankly, it's nice to get things right, like you're talking about. And I did get a couple things right this year. I predicted Buffett was going to take a stake in United Health and things like that. But the truth of the matter is I get a lot of shit wrong too. And so, I get nervous about people saying, oh, you just get this thing right. I get a ton of things wrong and I'm still learning as I go. So when I say, listen to Luke Gromen instead of me, I mean it, because Luke Gromen is 12 years ahead of me in terms of understanding what the fuck's going on. So I'm happy to say that. So if you're looking for an opinion from somebody who hopefully knows what he doesn't know also, then I'd love for you to come over and read.
Well, I appreciate your disclaimer and your candor and your color and your humor. So thank you so much for sharing that with us on The Real Story. Really appreciate it, Chris. Thank you so much.
I love your show, and I'm so happy that you and Andy Schectman have found each other. This is excellent parts of my financial media world somehow finding each other. I don't know how it happened. I loved you when you were with Kitco. And what's funny is when you messaged me, if you saw the last message from when you invited me on the show was from 8 years ago or something. And I had just sent you a message oh my God, I love your show. Really great job, great guests or something. So it's great that you guys have found each other. Big kiss to Andy Schectman. Love you, brother.
Well, what I love about Andy Schectman is that he is so open-minded, and that really aligns with how I see things, is that everything is up for debate, critical thinking,
yes.
Assess all of the positions. We talk about everything. And, through a diversity of perspectives and opinions, hopefully people come to conclusions that help them prosper. So that's kind of how
whether he's wrong or right, there's nobody out there saying what Andy is saying. No one. Not a lot of these Austrian guys I listen to, a lot of the gold bugs that I listen to. No, I found Andy from a podcast on Palisades Gold Radio where he was talking about the silver markets. And for me to hear shit that I had never heard before, given the amount of, incoming that I take from all these metals bulls and libertarians and Austrians, was stunning. And so I just respect him for being, off the path from everybody else, even the people that I would consider to be in our echo chamber. So I think he's brilliant too.
You're not going to get an argument from me, and he is definitely meticulously well-researched. And of course, on MFM, Miles Franklin Media, there's also Little by Little Andy Schectman's show, and Andy and I do a show together as well. So we're going to end it on this Andy Schectman and Luke Gromen Mutual Admiration Society. Admiration to you as well, Chris. Thank you so much for joining us.
My pleasure. Thank you.
All right. And a big thank you to our viewers. Feel free to praise, whine, or just opine. We love hearing from you. Leave your comments. Please subscribe if you haven't. And for me, Michelle Makori, and the rest of the team, we'll see you next time. Stay sovereign.